Right now, while most investors run for cover, a handful of stocks are quietly poised for explosive growth. But here's the catch: the risks are just as real as the rewards. Today, I'll reveal the 5 most talked about stocks for 2025 and the hidden truths behind the hype. Stay to the end, because what you don't know could cost you everything. Are you ready to buy when others are terrified? Or will you freeze, paralyzed by uncertainty, as the next bull market leaves you behind? Let's dive into the heart of the storm. The market just survived a panic. Tariffs, political drama, wild volatility. Sound familiar? History shows that when fear is at its peak, the seeds of the next rally are planted. Legendary investors don't chase yesterday's winners. They buy quality assets when everyone else is selling. But here's the truth: buy the dip isn't a magic spell. It only works if you know what you're buying and why. Academic research proves it. Buying fundamentally strong stocks during chaos can deliver outsized returns, but only if you avoid the traps. Picture this. In the depths of the last panic, Sarah, a small-town investor, ignored the noise. She scooped up shares of companies with rock-solid fundamentals. 6 months later, while her friends licked their wounds, her portfolio had doubled. The difference? She saw opportunity where others saw disaster. Let's break down the 5 stocks everyone's talking about. For each, I'll give you the dream and the danger. Tesla, TSLA, the triple threat. Tesla is obviously discounted, say the bulls. Imagine automotive sales soaring from 77 billion to 250 billion. Robo-taxis, full self-driving, energy storage. By 2028, some project 355 billion in revenue, a $3.5 trillion market cap. That's a 3 times return. But wait, these numbers assume Tesla dominates every frontier: cars, AI, energy. What if growth slows? What if regulators slam the brakes on self-driving? The 10 times revenue multiple sounds great, until sentiment shifts. And don't forget, capital expenditures, margin pressure, and dilution lurk beneath the surface. Would you bet your future on a company that must win every battle every time? Or is the hype blinding us to the risks? Applied Digital, APLD, the Highwire Act, a tiny AI and data center firm pivoting from crypto mining to powering the AI revolution. Revenues from $221 million to $2.6 billion in 4 years. Price target $93, up from $5. But this is the Wild West. Small caps are volatile. Execution risk is sky high. The bullish case assumes APLD outpaces giants in the AI infrastructure race. If they stumble, investors could be wiped out. In 2022, a similar company promised the moon. A year later, a single missed earnings report sent shares crashing 70%. The lesson? High reward equals high risk. Broadcom, the steady giant. Broadcom, the stable but killer growth play. Revenue could double to $110 billion by 2028, fueled by a 77% jump in AI sales. The stock price is projected to soar. But giants have their own problems. Can Broadcom integrate its VMware acquisition smoothly? Will it weather the ups and downs of the semiconductor cycle? Competition is fierce, and missteps can be costly. Hims & Hers Health, or HIMS, is like a telehealth tornado. It's a platform riding the wave of weight loss drugs, mental health services, and core specialties. Revenue could rocket from $1.5 billion to $6 billion. A $60 billion market cap is in sight. But telehealth is a battlefield. Customer acquisition costs are rising. Regulations are tightening. The GLP-1 weight loss boom could fizzle if insurers balk or supply chains falter. Palantir, the AI enigma. This secretive data powerhouse is projected to maintain a 35% growth rate, hitting $10 billion in revenue by 2028. Bulls see an 80 times price-to-sales multiple and a $358 share price. But 80 times sales? That's nosebleed territory. Unless Palantir achieves total market dominance and extraordinary profits, this valuation could implode. And what about customer concentration? Government contracts are fickle, and big tech rivals are circling. Here's the twist. Most investors don't lose because they pick the wrong stocks. They lose because they follow the crowd, buying high, selling low, chasing hype, ignoring risk. Every viral investing story dangles an open loop. What if I miss the next Tesla? But the real question is, what if I don't survive the next crash? The secret isn't just picking winners, it's surviving the journey. That means knowing your risk tolerance, diversifying your portfolio, and having a plan for when things go wrong. When the market crashed last year, Alex, a seasoned investor, rebalanced into Broadcom and Palantir but kept cash on hand. When small caps soared, he took profits, not losses. His secret? Discipline, not drama. Here's what no one tells you. The path to wealth isn't paved with viral stock picks. It's built on resilience, research, and ruthless honesty about risk. The stocks we covered today. Tesla applied digital Broadcom. Hims and hers Palantir are at the center of the next market narrative. But behind every headline is a hard truth. Valuations are aggressive. Risks are real. The future is unwritten. So, will you chase the hype or master the game? The next market panic is coming. Will you freeze or will you seize the moment? If you're ready to take control of your financial future, hit subscribe, share your thoughts below, and join the community of investors who thrive in chaos. Because in the end, it's not about picking the next big winner. It's about surviving and thriving when the world loses its mind. What's your move when the next storm hits? The story isn't over, it's just beginning.